Hey, what's going on, guys? This is Brandon, your trusted realtor, and I want to come to you with another amazing video. Today, I want to spend a little bit of time talking to you guys about preparation. Now, let's be real. Some of you guys have just been just saving money, and you may not have been completely preparing to purchase a home, or you're not completely aware of all of the dynamics that are going to be included, right? Because we talk a lot about different things that exist, but remember, not only is the process of buying a home deeply personal, but it's a transaction that's specific to you. Your scenario is going to be different from your cousins or your aunts or your uncle who purchased a home, right? I always say that the process of buying a home is much like social media. People always show you the good and the glitz and the glamours, and very rarely do they show you on the back end that there's a tag in their shirt and they're taking that Gucci shirt back to the store once they finish with that video. These are the type of things that are unique, that exist in the real estate process and are unique to each and every one of you. And today we're going to spend time talking about student loans. Yes, many of us have gone to school, gotten these advanced degrees, and financed those as part of the process. In fact, statistics show that on average, African Americans or minorities are going to have substantially more in the six figures, especially once they get past their master's degree, as it relates to student loan debt. Now, we don't think about it at the time. We don't talk about it, and no loan officer is advising the long-term impact of having this student loan debt on your ability or capacity to purchase a home in the future. So the things that are going to impact this, because it's more of a not so much complicated, lots of numbers, but we'll break it down in chunks under 10 minutes so you can digest it. The first is going to depend on the type of student loan you have, whether you have a private student loan or you have a government student loan. That's the first. That's one thing your lender will be looking at. The second is the amount of student loan. And that amount is also going to dictate the type of the loan type that you'll be eligible to use. Those three things taken together will really have the biggest weight or the biggest factors in determining your eligibility considering your student loan debt. Let's thread all these together. If you have high student loan debt, scenario A, this is someone who has 6 figures worth of student loan debt. In order to count what you're paying, right now student loans are deferred because of legislation, but let's say your monthly payment for that student loan is $2,000 because of the amount of student loan you have, and that's 1% of your student loan. Well, under conventional terms, they can take half of that. Under a conventional loan, they can take half of that amount and count it towards your debt-to-income ratio. Under FHA, they have to count the actual amount that you pay. So that actual amount, which is $2,000 in scenario A, means that it potentially will blow your debt-to-income ratio out of the water, especially if you have credit card debt or you're making car payments. Scenario B is someone who has no or low student loan debts. If you have low or no student loan debts and you have a government loan, then FHA will be willing to look at your payment plan and use 0.5% of that amount to qualify you for a mortgage loan. Now, each lender will take these things into consideration and your situation into consideration. But the purpose of this really is to hammer home that many people in the process of purchasing a home really focus on their savings, they will focus on their credit, and they will focus on paying things down. But that student loan payment is one of those big elephant in the room that lingers and will impact many individuals' ability to be pre-approved for a loan. Now, the way that you counteract this, because it can be a more complicated situation for you specifically, is by speaking with a lender. And contact me below, and my contact information will be below in the description, and I'll put you in contact with a couple lenders. That way you can go ahead and get a pre-approval done. Now, the power of having a pre-approval is that you at least know the information the lender knows, and you know how to push for it and proceed accordingly. And within that same time period, you'll have 14 days to have other pre-approvals done without it adversely impacting your credit. That's the credit grace. Now, the impact to your credit once you have a pre-approval done is closer to 2 or 3 points on your credit score. So significantly less than if you were to buy a credit card. Remember, your scenario is going to be unique for you getting to a house. whether you need to pay down student loan debt, whether you need to establish credit, get a secure credit card, pay off credit, everything is going to be unique to you. It's about having a discussion with a professional so that way we can tease out what your situation is, what your circumstances are, and put you in the best plan and vehicles so that it makes sense for you. My name is Brandon. I'm your trusted realtor. Remember, you are worthy. And if you haven't done so already, make sure you like, subscribe, hit that notification button, and share this video and this amazing content so that more people are informed about the process and get the information they need to be successful and to build wealth. I look forward to being your resource for all of your real estate needs. Take care and talk to you soon.